All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Okay, guys, I just wanted to hop on for a quick video update because Bitcoin is starting to dump right now, and we warned about this on Thursday and Friday's live streams, or I should say, I warned about this on Thursdays and Fridays live streams because we were coming up to some very, very key resistance on the charts. And on Friday's live stream in particular, as we were forming new highs, actually hitting into our value area low of the range and into our bearish backtest of the Fibonacci channel, which has been our support for the entire bull market. This was the area we were going to reject and continue this double 1-2 impulse to the downside. This was our big area where we could reject and form an impulse to make new lows to the downside. So if you guys remember on Friday's live stream, we were talking about how as this range was forming, we were forming higher highs in the price action, lower highs in the momentum waves. Money flow was draining out as the range was forming. Also, NAMI bearish divergence is confirmed. Money flow draining as the range was forming, making it more likely to be a distribution range, this range to be a distribution range. But I also said on Friday's live stream, we are going into a holiday weekend. And it's likely that we just range within this range, this small range, throughout the holiday weekend until markets open or until at late Sundays when the markets around other parts of the world open. And that we were looking at a possible model 2 distribution, a tap 1 here, a tap 2 here, or a tap 3 here, or your pattern of a head and shoulders pattern here. We were also talking about the possibility of a model 1 distribution where you could make one more high, but really I was looking at that model 2 distribution because we finally did hit our Fibonacci channel and the bearish backtest of the value area low of our entire 2025 range. And guys, we knew that this was a big possibility. And if we zoom out onto the daily chart, the reason why we knew this was a big possibility is because we did have our double 1-2 impulse to the downside. So from the all-time highs, we had our wave 1 here, our wave 2 here, our internal wave 1 and internal wave 2. And the reason we have to classify it that way is because we do have overlap between your wave 1 lows and your wave 2 highs here, making it invalid to be a 1, 2, 3, 4, 5, with this being the low here. What was that? Last Friday. And because we have the overlap, we have to go with the more bearish impulse to the downside, the double 1-2 impulse. Wave 1, wave 2, that's your primary. Here's your secondary, wave 1 and wave 2. And our drop from 107.5K all the way to 80.5K was our third wave. This was an impulse to the downside. Now, after we started bouncing on Friday, we expected a 3-wave corrective move up between the 0.382 and the 0.5 Fibonacci, pulled from your wave 3 highs to your wave 3 lows. And if we look at that, those targets between the 382 and the 0.5. But if you go check Wednesday's video and Thursday's live stream, I actually pointed out that the most significant resistance for me was around that 91.5 to 92.5 area of resistance, being the bearish backtest of our Fibonacci channel, the bearish backtest of the value area low of our 2025 range, and the bearish backtest of our anchored VWAP from the 49K lows. And this was the level, if we were going to reject and continue this impulse to the downside, this was the level it would happen. And we are starting to reject an impulse to the downside now. So overall, we can expect new lows. Based off the Elliott wave analysis, we can expect new lows. We have our third wave here, a 4. We need one more low and a 5. And then we need another 4 and another 5. So we could possibly come down to 74K or down to 74.5K and take out those lows. So let me go on to my other chart here, my higher time frame chart. And one of the scenarios we've been following on this channel really since the beginning of the year is, and let me zoom out a little bit more here. Let's go to the 3-day time frame. We've been looking at our bigger flat correction after finishing our 5-wave impulse to the upside on a higher time frame. You can see this entire move up for the bull market was a 5-wave impulse to the upside. Now, we said that impulse, I said that impulse was most likely to be done based off of our weekly break in market structure. We took out our range lows of this 3-month long range in here. So because we broke market structure bearishly on a higher time frame, it means that this impulse was more likely to be completed. Now, after any impulse completes, you're expecting a corrective move. And in the most bullish scenario, I talked about this all the way back in March, April, maybe May, throughout the entire year. We've been talking about this as a more macro time frame possibility of a super cycle type structure. But we were looking at, after that 5-wave impulse ended, a bigger flat correction in here to then come down and crash to take out your A wave lows in your C wave impulse to the downside. So far it is playing out rather nicely. We did reject from our pitchfork midline at our big resistance in the all-time highs. It was also our 1.382 Fibonacci extinction, which is the flat corrective extinction. So if we pull it from the highs of the A wave to the lows of the A wave, and we go to our 1.382, let's just do this, and let's do 1.382, and we look at that 1.382, you can see that we did reject pretty much exactly from that 1.382. We saw a little bit of wickage past it, but our all-time highs within this distributed, we saw a distribution range up here as well. And we talked about how this was more likely to be a distribution range based off the confirmed bear divs and money flow leaving the asset as the range was forming. Especially we could see that on the daily time frame. But we did reject from our flat targets for the B wave, a flat, and now our C wave targets are to come down to take out our 74.5K lows. So within your C wave, you're looking for an impulse to the downside within that C wave. Now, this is where we zoom in and we look at the structure from the all-time high. So let me go back to the Coinbase charts, and let's once again talk about that double 1-2 impulse to the downside from the all-time high. And I just covered this with you guys, but we have to look at this as a double 1-2 impulse because of the overlap between the lows of wave 1 and the highs of wave 2 here. So we're looking at this as a 1-2, secondary 1, secondary 2, your big third wave. Now we're looking for 2, a 4, and a 5, and another 4 and another 5. And yes, guys, it does look like this is playing out so far. The higher time frame Elliott analysis does look like it's playing out perfectly. And our target is to come down ultimately to take out your 74.5K lows. But right now, this rejection that we're seeing here, we talked about on Friday that it was more likely to be distribution based off as the range was forming. We were forming bear divs on the chart, money flow draining out of the asset, bear divs on the chart, money flow draining out of the asset. Both NAMI and Market Cipher B confirm this. And now we are starting to impulse to the downside. We also talked about this weekend was more likely to range throughout the weekend and then come market open on Mondays, which now this time that I'm making this video is market open in Europe and Asia. So if we look at our initial push down here that we saw on Friday, if we take our golden pocket from the highs that we made, the rejection from the bearish backtest of our Fibonacci channel to our lows that we made, and you can see we kind of have double lows here, but our lows that we made throughout the weekend, and we go to our golden pocket, we did just slightly front run that golden pocket. But in a wave 2 corrective move, your most common target is between the 0.5 and that golden pocket, and sometimes the 786. But we did reject from that general area, and now we're starting to push to the downside with increased volume. And that we should tell you, with this increased volume as this range is forming, this is more likely to be a third wave to the downside in here, and we are more likely to continue the impulse down. And remember, within our fifth wave, we're looking for all of this as a wave 4 that lasted about 2 weeks or about 10 days. And on Friday's live stream, I explained why we could expect this to last about 10 days, because our wave 2, let me just zoom out to the 4-hour here. Our wave 2 corrective move to the upside. Remember, this is our wave 1. This is our primary wave 2. And your primary wave 2, it took about, let's go from the lows to the highs here. It took about 9 days, 20 hours. And your wave 4s are generally as long or longer than your wave 2s. And so if we go measure the time from the lows on Friday to the highs that we just made on let me redo that here. From the lows that we made Friday, November 21st to the highs that we made Friday, November 28th, it's about 7 days. So it's a little bit shorter, but we can also pull it all the way to the end of the range because that's a distribution range. And so you can see it's about the same time, 9 days. And now we are starting to reject to the downside. So, guys, we are looking for ultimately a 5 wave impulse here, a wave one, wave two. And I think our third wave is going to extend to around the golden pocket and naked daily point of control and the daily level between really 85K and 84.6K, where we could see a small bounce for a wave four before seeing another fifth wave to come down to take out your lows from Friday, the 21st of November. And then we would see a bigger wave four that would last around 7 days or so before seeing another wave five, possibly coming down all the way to 70K. Now, the target is to come down and just take out your 74.5K lows. We do not have to come down to 70K, but with us having such macro support there, it is likely, in my opinion, that we're going to come down to 70K. We don't know yet. Now, zooming in onto more local structure here. From our lows on Friday, November 21st, we have this push to the upside. We did reject from our very, very key resistance that I laid out and showed you guys ahead of time, warned you that it looked like it was distribution. It was going to dump from this area, and now we're starting to dump. But within our impulse to the downside from this last Friday, a couple days ago, November 28th, we can see that 1, 2, our third wave is likely to continue down a little bit further. And if we pull a trend-based Fibonacci extinction from the highs of 1 to the lows of 1 to the highs of 2, we are now hitting our 1.618 Fibonacci extinction target. And that is the target of a wave 3 impulse to the downside. So we're at least seeing some sort of reaction here. But it does not have to end at the 1.618. Oftentimes, it will go further. And you can see our 2.618 Fibonacci extinction is aligning perfectly with our naked daily point of control, our daily, and right above is our golden pocket. So we might see this third wave continue down a little bit more before seeing a 3-wave corrective move and a bounce in a fourth wave before coming down ultimately in a fifth wave and taking out Friday, November 21st lows. And then once again, guys, that would only be the first fifth wave. We would expect another larger fourth wave and another larger fifth wave to come down to take out your 74K lows. So this is the update I wanted to tell you guys. We are starting to dump from the key resistance. I told you guys this on Friday's live stream. We emphasized it during the entire live stream on Friday. We emphasized it on Thursday's live stream as well. Starting to dump here, and volume is coming in. Confirmed bear divs on the chart. Distribution range likely, and it is looking like it is occurring here. Just wanted to give you guys a quick update on this. I hope this video helps. If it did, please like the video. Please subscribe to the channel. Also, just want to shout out, we do have a couple more days of sales, actually through tomorrow night. We do have that Cyber Monday, Black Friday sale from NAMI. NAMI is one of the partners of the channel, and they are doing a really amazing, the best sale they've ever done. So for Black Friday through Cyber Monday, if you're interested in purchasing NAMI, which is this momentum and money flow indicator, I use it for all my confirmations. This is how we knew that it was likely to be distribution range here. But if you're interested in purchasing this indicator, if you do use my affiliate link in the description and type in the discount code here in the promotion box, the first 3 buyers can get 65% off. The next 5 buyers get 60% off, and all the way unlimited amount through Cyber Monday, you can get 55% off of NAMI. This is the highest sale they've ever done in the history of this company. So if you are interested in purchasing NAMI, I suggest you do take advantage of this. Just great way. It's only going on through tomorrow night. So if you're interested, I would recommend doing it now. Also, we do have BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up with BYDFI using my affiliate link, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you deposit some of the larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, and they're giving some of the best initial deposit bonuses in the entire industry. So if you deposit $100, you can get a 50% deposit bonus, which is the highest of any exchange I've seen. They're offering 20 and 10% deposit bonuses depending on how much you deposit. For me, this is great. It's just a way for you to earn some extra income. You can use that to offset your trading fees. Obviously can't withdraw that, but you can withdraw the profits from the bonuses. And also, I have partnered with BYDFI to create a Telegram community where I do post my analysis. I just posted just now before I made this video about the impulse to the downside, about the rejection in the distribution range. But if you're interested in joining that Telegram, it is free. All you need to do is sign up with BYDFI using my affiliate link and deposit $100 into the exchange. That $100 is your money to trade with. You get the discounts on the trading fees. And if you do KYC, you can get the 50% deposit bonus here. And once you've done that and deposited money in the exchange, click the Telegram link in the description of this video. Once you're in the Telegram, type in /verify in your user ID, which will be right up here. It's probably going to be a string of letters and numbers for you. And once you do that, you'll automatically be put into that Telegram community. And once you're in, you are in. So partner with BYDFI for the Telegram if you're interested. Links are in the description below. And then lastly, we do have MEXC and Bybit, both great exchanges offering discounts on trading fees, offering some futures trading bonuses and some initial deposit bonuses. So if you're interested in joining either one of those exchanges, links are in the description down below for those exchanges. But guys, we are starting to dump. We are starting to see a dump with increased volume to the downside. And overall, I have to say, I am expecting new lows to come in on Bitcoin. We are rejecting from our very, very key bearish backtest. And I don't know if I went into this yet, but the bearish backtest not only was the value area low of our 2025 range. So let me zoom out to the daily chart. Our entire range of 2025, we lost it last week and closed a weekly candle below it. So oftentimes you will see a dead cat bounce to bearishly backtest that area. If you reject, you expect new lows. But not only was it the value area low of our 2025 range, it was also our key anchored VWAP from the 49K lows, from our range 2024 lows. And here's the thing, guys. Remember how important our 107 anchored VWAP was? That was our anchored VWAP from the 74K lows. And I talked about this before this happened. We wanted to maintain this as support. If we lost it, we were expecting a bearish backtest of it before new lows. And exactly where we got this last impulse in our wave 3 to the downside is where we rejected from that anchored VWAP. And so we could be seeing a repeat. And I covered this on Friday's live stream in depth, guys, if you want to go watch Friday's live stream. But we held it as support a couple times. Once we lost it and closed the weekly candle, bearish backtest, new lows. Now we closed a weekly candle below the 49K anchored VWAP, which was the next major support anchored VWAP, bearishly backtested this holiday weekend, and now we're rejecting. So we can expect new lows on the charts overall. Yes, we will see small bounces along the way. But I talked about this in depth on Friday's live stream. I warned you guys ahead of time it was likely. You can see on the daily time frame, money flow is leaving out of the asset again, and we did print a hidden bearish divergence on NAMI on the daily time frame, on the high, on the bearish backtest of the Fibonacci channel, of the anchored VWAP, and of the value area low. So things aren't looking good for Bitcoin. It does look like we are going to continue down to make new lows on Bitcoin. Now, once we get to 70K, that's going to be a different story. I will be flipping very bullish, maybe even at 74K or 74.5K once we take out these lows. But for now, my bias is for more downside overall. And we'll just see how it plays out, guys. But I wanted to make this quick update for you to let you guys know what is happening. And I hope you guys had a good Thanksgiving. Hope you guys had a good holiday weekend. I will be back to my normal schedule for Monday through Friday next week. And I will see you Tuesday, Thursday, and Fridays for live streams. Please come join me, 2 p.m. Eastern Standard Time. You all have a wonderful night, and I will see you tomorrow.